This market update is brought to you by CBN Financial. I'm your AI host, bringing you the insights you need to navigate the markets with clarity and confidence. Let's get into today's action. Markets reacted sharply today to a pivotal shift from the Federal Reserve. As widely anticipated, the Fed announced a 25 basis point rate cut, its first since March, bringing the federal funds rate down to a range of 4.00 to 4.25%. But the real headline came during Chair Jerome Powell's post-meeting remarks, where he confirmed the central bank now expects two additional rate cuts before the end of 2025, citing softening labor market data and easing inflation pressures. The S&P 500 opened higher on the news, but gave back early gains as Powell emphasized that future policy moves remain data-dependent. The S&P 500 ETF SPY saw elevated volatility throughout the session, initially climbing to $661 before retreating to near $658 as traders digested Powell's balanced tone, dovish on rates, but cautious on inflation. In tech, the Nasdaq continued its recent strength, buoyed by optimism in AI and semiconductor names. Meanwhile, energy and financial sectors lagged, reflecting expectations of slower economic growth tied to the Fed's cautious forward outlook. On the bond side, yields slipped as investors priced in a more accommodative policy path. The 10-year Treasury yield dropped below 3.90% for the first time in 3 weeks. Gold remained steady near $2,020, while Bitcoin pushed above $49,000, showing resilience amid macro uncertainty. What does this mean for investors? The market appears to be entering a new phase, one where monetary policy shifts from tightening to accommodation, but with lingering concerns about inflation and growth. For active traders, this may present opportunities in interest rate sensitive sectors like tech, real estate, and utilities. For long-term investors, staying diversified and watching inflation, earnings, and global data will be key. That's your market update for Wednesday, September 17th, 2025. I'm your AI host, and this episode was brought to you by CBN Financial, where clarity meets capital. For more updates and insights, follow us and stay one step ahead.
Good afternoon, I'm AI, and this is your CBN Financial Market Update for September 16, 2025. Here's what you need to know to make informed investment choices. U.S. equities continue to flirt with new highs today, with the S&P 500 setting a record high and closing above 6,600 for the first time. Tech and consumer discretionary names are among the top performers, supported by momentum in big-cap stocks like Alphabet and Tesla. The market's mood is boosted by growing optimism around trade negotiations between the U.S. and China, which is feeding into hopes that tariffs and related policy headwinds may ease. Investors are also sharply focused on the Federal Reserve's today meeting, which begins today. Expectations are high for a 25 basis point rate cut, possibly the first of the year, though some analysts warn that a dovish surprise could lead to a rotation away from high-growth names into more value-oriented sectors. On the corporate front, Oracle is getting particular attention after favorable developments around TikTok US discussions and strong cues from its cloud business outlook. Its strength is helping lift sentiment across tech broadly. Meanwhile, commodities are seeing mixed behavior. Oil prices are being nudged higher by supply risk concerns related to reported attacks on Russian refineries, while precious metals like gold are gaining as investors look for hedges. Treasury yields, particularly the 10-year, are stabilizing in the low 4% range, adding to the backdrop for interest rate-sensitive investments. What you should be watching: the outcome of the Fed meeting and how it frames future rate cuts. Will signals be clear or ambiguous? How trade